It's a pleasure to be presenting this morning to the GCFF crowd. First time for me, certainly, and what a pleasure. So we have lots to talk to you about this morning. Lots of really exciting things on the go in DeLamar, southwestern Idaho, our flagship project there. We'll take you through a bit of the history of the project, where the upside is, what the plan is for the next few years as we march this 4.4 million ounce gold equivalent resource from pre-feasibility through to development and into production. I'll be making a few forward-looking statements throughout the process of presenting to this group. So just to kind of set the stage here, in terms of what Idaho is. Idaho has a very rich, glorious history of gold and silver production that goes back to the late 1800s. In fact, there are so many important gold and silver rushes that were sparked off as a result of discoveries made here back in the 1800s. And then, as you see on the left-hand side here, this is the landscape of gold and silver deposits, cobalt deposits, phosphate deposits in Idaho. Idaho is a very rich state when it comes to mineral resources, and it has a long history. You can see where we're located in the left-hand corner in that yellow box, about an hour and 45-minute drive from the state capital of Boise. Now on the right-hand side, a couple of the things, the investment criteria that certainly I look for when I invest my own money, and I know others do. I invest my own money into Integra and as well into the same space of advanced explorer, near-term project developer. That's where I like to put my money. And the things that I look for, and I know other people look for, number one, strong balance sheet. Company has to have the ability to see themselves at least through the next de-risking stage. And that's certainly the case for Integra. We've got $32 million US in the treasury, more than enough to see us through to the end of our pre-feasibility study. Location is important. Tier 1 jurisdictions are important. Tier 1 jurisdictions, those being the lowest risk on the planet when it comes to areas to develop an asset. Idaho is in fact ranked number 8th on that basis, amongst 100 other jurisdictions around the world, and more on that a bit later. Where I look at the scarcity of assets. There are very few, very large resource assets in Tier 1 jurisdictions that are really poised to go into production. And we also believe as a company that the M&A cycle while it's yet to really begin, we believe over the course of this next year, it's really going to start to assemble and take off. We're in a position, we're a period where we're seeing the mid-tier and the major gold producers making a lot of money at $1,800 gold and $25 per ounce silver. And at some stage, you know, they're going to want to buy assets. We've seen it. I've seen it throughout my own career. The beginning stage of M&A is just kind of getting together. That's the feeling that we have. And with our large 3.9 million ounce measured and indicated 4.4 million ounce all category resource, we're really poised to be well positioned for that M&A cycle when it comes. We believe it's soon. And then last but not least, I think others have touched on it on other presentations. Certainly that's the flavor of the questions that I've been hearing this morning. The management group, what's their track record? And I tend to put my own money into companies that have a management history of delivering value. And that's certainly the case with Integra Resources, which I'll show you a bit later on. This is the same group that brought you Integra Gold with that very large M&A transaction, $600 million sale of Integra Gold to Eldorado just over 3 years ago. And you know, we're poised to do it again with the same team and the same playbook, this time in southwestern Idaho. Just a bit of a brief comment on our cap table, 54.6 million shares outstanding, so really tight share structure. About 60% of our shareholder base now, 60% plus, it would be institutional shareholders who made a lot of money with Integra Gold and then now followed us into Integra Resources. Management and insiders own over 5% of the company. That would include myself and the senior executive team. As I mentioned, 32 million shares outstanding, $32 million in the treasury, US, more than enough to take us through to the end of this year. And then on the right-hand side, and perhaps I'm biased by this, but I think we've got one of the best universes of coverage for a company of our size. As you can see here, these are all the banks that cover us. with research. Some are churning over. There'll be some new analysts coming in to replace some of the recently departed analysts in some cases, but we have great coverage both in the US and Canada. And being listed both in the US and Canada, you need that coverage on both sides. And in fact, we listed on the New York Stock Exchange this past summer, and that was a tremendous benefit to our shareholders. We almost doubled our liquidity in the process of doing that. So there's a number of ways that a company, an advanced explorer, junior resource developer, can benchmark itself versus its peers. And this is our universe of peers. This is one way. This is a measure of risk reward, essentially. Profitability along the bottom axis, increasing profitability going from left to right, and from bottom to top, we have decreasing jurisdictional risk when it comes to location of these assets. So where you want to be on this graph is up in the right-hand quadrant, essentially where we are. But that's not the whole story. The whole story is you don't necessarily want to have the largest size of dot, because the large size dot denotes market capitalization. And I should note that the larger circles on this graph, some of our peers, all have projects that are perhaps a year or two more advanced than ours. They are perhaps at pre-feasibility moving on to feasibility, or feasibility moving on to permitting. We have a number of months before we deliver our first pre-feasibility study for the project. So that de-risking event, we believe, will accrete a lot of value to the stock. And that, in fact, is the value proposition for our shareholders. Now, just to talk briefly about management legacy. This is the same group as we mentioned earlier on that brought you Integra Gold. This was a great story, a $25 million market capitalization exploration company focused on a past producing district in northern Quebec. And we took that from a $25 million market cap, made some great discoveries on the way. We're on our way into production. Basically, we were poised to go into production imminently when Eldorado Gold came along, offered a 52% premium offer to our shareholders. It went to a vote, a very successful transaction. In fact, a very successful transaction for Eldorado, as it turned out. We did one key thing with this, which was many management groups, after having that much success, would go their different ways. We did the complete opposite. We decided to keep the team together, and we decided to follow the same recipe book, this time in southwestern Idaho. Advanced stage asset, tier 1 jurisdiction, low cost to build asset, which I'll show you in a sec. Moving to Idaho, what's it like to be in Idaho, operating in Idaho? Our experience has been fantastic up to now. The state government has been extremely welcoming to us in the very short period of time that we've been there, in just over 3 years. And obviously, as I mentioned earlier, the Fraser Institute ranks Idaho as a top tier 1 mining jurisdiction relative to other mining jurisdictions around the world. In fact, it's ranked number 8. And I note that none of the provinces in Canada actually made the top 10 list last year. So that speaks volumes to the receptivity of Idaho to mining. Another advantage that we have, Butch Otter, former 3-term Idaho state governor, sits on our board. When he retired from politics last year, he decided to join our board, and as his only precious metal directorship. And that is a huge advantage for us, because Butch is the one who appointed all of the state leads on all of the departments that we will be dealing with when it comes to permitting here on in. And so Butch is the ideal person to open those doors for us. And we're just starting that process. And this is, in fact, a picture of Butch on his horse at his ranch taken last year. So we talked about the issue of scarcity as an investment criteria. And on that basis, we had National Bank do a bit of a study for us, looking at the entire universe of gold and silver resources around the world. And in fact, there's 3,500 declared gold and silver resources in the Earth's crust around the world. Now, an interesting thing happens when you start to apply different filtering criteria to this universe, the totality of the 3,500 assets around the world. When you start to remove the projects that have perhaps less than 100,000 ounces of gold equivalent production per year forecasted, when you start to remove the projects with less than 10 years of mine life, when you start to remove the projects that are not in a tier 1 jurisdiction, i.e. a low risk jurisdiction such as Canada or the US. And then finally, when you start to remove the projects that would cost more than $500 million to build or more, and that's certainly not Integra DeLamar, really it all boils down from 3,500 assets to this short list of 4. So you can see that we're in a really privileged position owning 100% of DeLamar and Florida Mountain. It is really a rare asset. So just to talk to you a little bit about the historical aspects of DeLamar in Florida. It's got this glorious history. It was the site of one of the largest gold rushes in the late 1800s into the Western USA. A history that goes back to the 1860s up until the time of World War I, when some very high grade veins were mined underground. And we're talking about grades that were in excess of 15 or 30 grams per ton that were mined in some very, very high grade veins. And in fact, in one location alone, a deposit that we own 100% of, we know for a fact that 250,000 ounces of high grade gold and silver was taken out from underneath Florida Mountain. Then you had a period of basically nothing happening until the 1970s to the 1990s. And this was really the era in the Western US of bulk tonnage mining, open pit mining, agitated leaching through a plant in the case of Kinross. And this is where you saw DeLamar operate as a very profitable mining operation from the 1970s to the late 1990s until such time it was shut down. And it wasn't shut down due to exhausted resources or reserves. It was shut down purely because of price considerations. If you were in the business back in the late 1990s or 2000s, you would remember the gold and silver prices were very low. Gold, in fact, was well below $300 an ounce over that period. And so what that means to us is a very large resource was left behind by Kinross at that time for us to then continue on and reopen at higher gold and silver prices. So that's the opportunity for us going forward. 2020, lots of exploration news that we created while we were de-risking the project, moving towards pre-feasibility. We conducted about 16,000 meters of pure exploration. We made a number of very high-grade gold announcements and discoveries at areas such as Florida Mountain and War Eagle. Some significant grades were intersected in both cases, you know, tens of grams per ton of gold and hundreds of grams per ton silver over several meters, up to 30 meters in thickness and in either one of these locations, very much pointing to the fact that we are on the cusp of what we believe to be a big push into high-grade growth this time in our story. We finished 2020 with a very strong balance sheet, $23 million we raised, $23 million. We now have about $32 million in our treasury, more than enough to take us through the end of this year. We listed the company on the New York Stock Exchange, which was really, you know, purely a no-brainer for us in terms of where we needed to list our shares to attract US retail, because US retail investment really likes homegrown US gold silver development projects. And in fact, that's been a great boon for us. And last but not least, our first initiatives towards permitting the project to move it into development, we signed an MOU, Memorandum of Understanding, with the Bureau of Land Management, and we're now starting to see the first efforts to move the project through the hurdles of permitting. Taking a look back at the economics of this asset, our first study, the PA study that we announced a couple of years ago, we looked at less than half of the total resource in trying to make an effort to assume or get a snapshot of what the economics of this project could be on a fully developed basis. Now, bear in mind that we used a low gold price and a low silver price at the time, $1,350 gold, $1,690 silver. And even at those gold prices, and silver prices, we were able to achieve a very strong NPV and IRR. NPV would be $350 million US dollars, and the IRR after tax would be 43%. So a very economic project that would cost us only about $160 million US dollars to build per the PEA that we put in. Now, if you start to look at the gold project and the silver project that we have there at, say, current gold prices or something close to current, $1,800 gold, $2,250 silver, now we start to talk about a project that has a $675 million net present value and a 74% after-tax IRR. So really robust economics. for a project, again, that would only cost about $160 million to build, something that we could afford to finance and build today if we had the green light to do so. So a very profitable mining operation, which sits there, lots of optionality, lots of silver. I know silver is very topical right now. The vast majority of the revenue from this project is from gold, but we do have a very large silver credit tied to this project, which we're looking to enhance. So this project was able to demonstrate 124,000 ounces of gold equivalent production per annum over a 10-year period. What we're guiding on in this next study, the pre-feasibility study, which is due out in the latter part of this year, is perhaps a production range of 150 to 200,000 ounces. So a larger production range is what we're forecasting in the upcoming pre-feasibility study. Another measure of how we rank relative to our peers, PNAV, which is called price to NAV. And as you can see here, we kind of sit right down the middle from a valuation perspective, trading at a PNAV at about 0.5. I note a number of our peers to the left-hand side who trade at higher PNAV valuations have projects that are more advanced. Perhaps they are a pre-feasibility study. Perhaps they're even moving into development and production. And so as we de-risk this project, as we do our pre-feasibility study and de-risk the project, we expect more value to accrete to our story as we move to the left-hand side of this graph. Again, yet another value proposition for our shareholders. We talked about exploration, Florida Mountain, and specifically lots of success that we had there last year. Our hit rate on high-grade veins, and again, I'm talking about veins that run 10 to 30 grams per ton over several meters, is starting to really come together. 50% hit rate outside of the resource envelope. And in fact, in areas where we're drilling 150, perhaps up to 250 meters outside of the existing resource, we're starting to hit these high grades of gold. And the interesting thing is, these are the areas that were mined by these old-time miners, which I mentioned back earlier in the presentation. These are those same veins that were mined by the old-timers back in the day. And we believe we're starting to see enough of them where at some stage we'll be able to put together a high-grade resource in addition to the low-grade resource that we have both at Florida and at DeLamar. War Eagle, same story, a little bit less advanced relative to Florida Mountain, but the same flavor of very, very high-grade intercepts that we have there. And then last but not least, an area that we're drilling right now, we had one drill rig drilling in this area called Black Sheep. And what our geological team has interpreted here is essentially a vast area, 25 square kilometers, that hosts the same geology as DeLamar and Florida Mountain, yet has not been explored in any modern sense. So we're putting our first drill holes down there now. Everything's looking great. We have to wait for assays. Assay turnaround is very slow these days. Don't just take it from me. Talk to any other resource company out there. We're experiencing huge delays in assay turnarounds, but we will get some information out to the market shortly on Black Sheep. So this is the 4 areas that we'll be drilling, focusing our efforts on. Florida Mountain, War Eagle, as you can see there, and down in the southeast. DeLamar itself will be drilling some of the extensions of that coming up this winter and into the spring. And then Black Sheep, where we currently have 1 drill rig in operation. Again, everything's looking excellent out there. So the 2 dominant themes for 2021, essentially value creation. Continue doing what we've done and we've done best. We've grown this great resource over a short space of 3 years, just over 3 years, 10,000 meters of exploration drilling, lots of new drilling in new areas, great discovery potential in these areas, a resource estimate to be done by the middle of this year, and then moving into the de-risking phase, if you will, of the project, where we deliver a pre-feasibility study to our shareholders in the 4th quarter of this year. And then we start really the first iterations of permitting, the plan of operations, et cetera. And then there's our timeline, essentially lots of activity 2021, both on the exploration front and on the de-risking front. We're a company that you'll never see us stop drilling. That's what we do. In addition to all of these engineering studies that define economics, we continually push the envelope of discovery. This resource is going to grow, no question. And this is our expected timeline to get to a record of decision to build a mining operation. And last but not least, this great management and board of directors team. And this is the same group, as I mentioned, that brought you this tremendous $600 million friendly takeover by Eldorado just over 3 years ago, poised to do it again, this time in southwestern Idaho. So on that note, I'm happy to take any questions that might come from the crowd. You can reach us at our website. You can in fact go to our website, www.integraresources.com, and book a meeting anytime with any of us. There's a function there that allows you to book a meeting with us anytime. So I encourage you all to request a meeting. We'll take you through the story in much more detail. Thanks very much.
Thank you, George. So let's address a few questions here. This one coming from Anke here. She's asking, maybe you mentioned a bit, maybe you can elaborate a bit more. That PFS is coming before the end of the year. How do you think it will improve from the PEA done before in terms of the size or other matrices?
Yeah, so I mean, our guidance that we've given our shareholders, Gilbert, is the biggest improvement we believe will come from an expanded production profile relative to what we put out in the PEA. So the PEA was 124,000 ounces of gold equivalent production per year over 10 years. Because we're including more resource into this PFS and other enhancements, we believe that our production level will now be in this PFS. We're targeting or expecting something that looks like 150 to 200,000 ounces. So that's by far the biggest improvement. Obviously, the economics of the project will be enhanced because we use 1350 gold and 1690 silver in our PEA study. We'll be using a higher gold and silver price, obviously, in the upcoming PFS as a result of what's happened in the last 3.5 years. So those are kind of the two main improvements, we believe.
Sure. Another question coming from Peter here is that, do you think that you will be bought out by a larger company, or are you planning to purchase a junior company to expand?
No plans certainly to purchase a junior mining company right now. We're really focused on de-risking and growing DeLamar as we speak. As I mentioned earlier, in terms of becoming an M&A target, my belief is, though we have the ability to finance a future mine, we have the ability to build a future mine because we have that talent, we have that expertise. I don't think we will be the ones ultimately building this mining operation. Tier 1 jurisdictions that are 4.4 million ounces of gold equivalent, with all of that infrastructure in a mining friendly state such as Idaho, are really rare. And when the M&A cycle starts, and we believe it's going to start soon, it's assets like this that will start to become quite an attraction to the mid-tier and major gold producers. That said, we have the option to build this asset if we want. We're not just going to sit there and wait to be taken over.
Sure. So one last question to take from Wayne. In terms of the ESG, what kind of work are you doing on this project?
Yeah, lots of work on the ESG front. So we've just started on the topic of stakeholder engagement, because that's going to start to become very important for us as we move into permitting. If you look at our history as a company, Integra Gold, we started stakeholder engagement really early in the process as we were building the mining operation. And the earlier the better is kind of our philosophy, and that is obviously paying dividends for Eldorado, who now develop and operate that asset. So we're doing the same thing. So we're starting all of the key stakeholder engagement on the project. Another interesting thing with respect to the pre-feasibility study that we're doing on the ESG front, especially from the environmental front, is we have an engineering group that's dedicated towards looking at this project from a pre-feasibility perspective. And then we have what I would call a shadow engineering group, which observes everything that we're doing and are looking for ways that are perhaps more environmentally sustainable to develop this project, and suggest those enhancements and improvements to the key and core engineering group in a way where we can develop this project in perhaps what might be one of the most environmentally sustainable and efficient means of any project in certainly the Western US that we know of. So we're doing things like that. We have community outreach, community support, food drives. We're constantly pushing the envelope of ESG. We know how important it is something that we're very familiar with coming from Integra Gold, which we did a lot of back then.
Sure. So thank you, George. Thank you for sharing your story with us.
Gilbert, thank you very much.